Hi guys, welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, whole lot of truth, no financial advice. This is a one-take session about GameStop. Guys, this is the 2-year anniversary of this channel this week, and everyone's been asking me to break down GameStop earnings, what's going to happen. I'm going to do that for you right now, unapologetically. You guys know the way this works. I'm going to show you what I uncovered, but let's go ahead and look into the company itself. And of course, I want to say thank you to everyone that's been rocking with me for 2 years. It's been a hell of a ride, holding this stock for 2.5 years, watching this leadership team transition, pivot, and of course, lay down the infrastructure for something that's going to be amazing moving forward. I love what the company's doing. I love what the stock does, and I love to buy it every chance I get. So this is projected earnings, Q1 2023 by Morant's Rants, of course. GameStop, you guys know what it is. If people don't believe in this company, that's one thing. They can be the naysayers. They're not gamers. There's a lot of things where they don't believe. There are some people that are just here for a short squeeze. I'm not one of them. You guys know how I feel about this company fundamentally. I love the way it's run. I love the leadership. I love the retail aspect, the brick and mortar via e-commerce, and how it all works out. So I see long, pragmatic growth. Absolutely, I do. I do see that. But I also see the leadership team wielding it. I see them making it happen, putting their money where their mouth is, holding their stock, doing their part, and we're going to go over that right now. So let's go ahead and look at this chart first. This is GameStop right now, currently $20.69 with a market cap of over $6.3 billion. So I love the market cap. I love that it's actually 1 times their earnings. It feels good about what it is. And maybe this is our bottom. Maybe we found it so that it can't go below $17.50, $18. In that case, I've shown you the TA. I've drawn it up. We're not even at the apex of what it could be, this bullish pennant that we have. But GameStop's it looks great on a chart for us, gapping up after earnings, knowing that it hit $27. We said it would on this channel. We all made the prediction. You saw it, put it out in writing, that it would hit 27. It's come back down to earth, only to fill the gap and then bounce back where it's at right now. We've just finished out, I believe if you're looking on the 4-hour chart, we finished out like 12 segments in a row in the green, and finally a red day the other day on Friday. But I'm okay with it, guys. To lose $1 to gain, 3, I feel good about it. It's $1 billion move because their shares out right now are 304 million. I look at everything. I look at all aspects of this company, and there's not a downfall for me just yet. The fact that they have zero debt. And when I mean by zero debt, there is some debt there, maybe $30-40 million, but that's not going to make or break it. They have $1.4 billion in cash, to ballpark the number. The $1.4 billion in cash represents that in their worst year ever, they lost $300 million. That was 2021 and 2022. They would have to have the worst year ever for the next 3 years, and they would still have money. They would still have plenty of money, $500 million worth. Not to mention they can still borrow money from the loan facility. So there's a lot of things this company can do. They're not distressed. They're not in trouble. They are sitting on their hands waiting for the right moment to quote unquote pounce. So that's how I feel about the stock and the company itself. But let's go ahead and look at this right here. So this is going to be the net sales for April. And this is in 2022, last year. We managed to lose $144 million. But what I didn't realize when I actually saw that number versus the previous year where they only lost $3 million, that's ideal. To only lose $3 million in that first quarter coming out the gate is ideal because the 144 is not real. That 144 number you see there, the 144.2, they're actually hiding money in there, and there's money to be hid. And the reason why they're doing that, if you look at something like this, during the 3 months that ended April 30th, 2022, we recognize an impairment charge of $33.7 million associated with the digital assets and SG&A expenses. So they actually had these digital assets that they sold off. They had numerous things that they're selling off in that time frame, but that was for the infrastructure for the NFT marketplace, the deal that they actually pledged $150 million to IMX. There was so much money involved in there hiding out on the operating losses side that Wall Street goes and runs with it, right? If you're a bear, you're looking at things and say, oh, look, they lost 144. But the truth is they only lost about 3.6. That's give or take for that time frame. The infrastructure they're paying for is all bought and paid for. It's what they call one-timers. And all the one-timers are out of the way right now. So I feel that this quarter could represent a flat operating loss, and only because we're better operators today. You don't have inflation breathing down on you. Everything has already annualated on that time frame as far as your expenses and how you pay and salaries. Maybe they figured it out over these last 2 years. We're about to find out though. But to go from a $3.6 million loss 2 years later with new leadership, new direction, new everything, you're going to tell me that they didn't do better than 3.6? I want to find that out myself. So we will, and we'll figure it out from there. Now, next, as you go down, I'm going to show you what the DRS. I know a lot of people are jazzed up about DRS. Back a year ago, in the same time frame, they had only done about 50 million shares DRS, We already have that up to 84 million shares. There are 56 million shares left on the free float to DRS. So we'll see what the number is. We'll update it. But I just tell you guys right now, you DRS guys, you guys that are buying it out like crazy and booking your shares, you guys are doing some damage out here because this stock is illiquid. If you haven't noticed the float and you haven't noticed the volume, there's none. So I just want to point that out. Now, net sales, if you guys have seen all this and you guys go across the line, the biggest detractor here that I see is that GameStop managed to lose a net loss of $66.8 million May 1st, 2021. Now, remember what I told you about the 157? The 157.9 had a lot of one-timers hidden in there, and they hit them in the SG&A. Just like I showed you the 33.7, they had $452 million SG&A. That's not the real number. That's not a realistic number. That's not an everyday number. We're looking more along the lines of 370. But because I know they've closed stores and they've managed to lay off certain amounts and close down fulfillment centers, I'm looking more at a 350 number. So if you can get towards a 350 number, you're looking at a $100 million increase on SG&A in the positive. It's going to switch the delta. That means that they should only lose around $50 million. Now, could they do it again? Could they add in more one-timers to just what I call, the sandbag the number? And because there is an additional charge out there that they have not taken off the books, that they have not redeemed versus the milestones for IMX. IMX still has about $50 million more dollars that are supposed to go to them, pledged to them, and GameStop has it allotted that way already. I've shown it in another video, but I'm just telling you, I'm looking at around a $50 million loss for the quarter if they go ahead and just SG&A. I'm not even talking about the sales of products, right? I'm just talking about SG&A. So if you look at the sales of products, and I want you guys to pay attention, they had a drastic increase, 21% increase on software, a 25% increase on collectibles. They had a decrease in hardware and accessories. That's attributed to supply chain issues. You didn't have that this year. I don't feel you've had that this year because we drew flat year to year on Christmas. If we drew flat quarter four and we had less stores open, which we have had, that means that we found our equal footing, we found our equilibrium as far as the floor, and we know how to balance it out, e-commerce versus brick and mortar. So I feel with the games that came out during quarter one, I apologize, Harry Potter, the Hogwarts one, and if you really want to think about something selling, look at Zelda. It just happened the other night. So Zelda won't be on these books, but I'm just letting you know there's games that keep coming out, keep pushing the envelope. Diablo 4 is coming. There's numerous games that get released. There's a Call of Duty every year. So let's go ahead and look at the chart and let's see if they can have an increase on these numbers, even if they drew flat. A 21% increase is massive. An 8% increase year over year is ideal for retail. That means you are doing wonders. The issue that I have is retail in general is a weak segment right now. There are no wonders to be had right now out here in the retail world. Go look at every company that's filed for bankruptcy and or showing a loss. The fact that we showed an 8% gain year over year, somebody should be jumping up and down. And they weren't last year because all they were looking at was the 157 net loss that everyone wanted to throw in your face. When the truth is they had an 8% increase in sales, net sales. That's massive. Don't let the one-time activities confuse you. So let's go ahead and look at cash flow. When we look at the cash flow, GameStop went ahead and had $304 million leaving for operating activities. Those are the one-timers that I'm telling you about. If you look at it the previous year, they only lost, out of everything they did, they only lost $33.5 million versus the $300 million that left the company the year before, or the year later. So when I look at this, guys, GameStop has the potential to do what it did in 2021. Go positive, and I'm not going to say it's going to go positive 135. It's going to go positive some amount, or negative, maybe let's just say $40 million. Everything's ballparking within that $50 million range. So as long as we're not showing a loss of $150 million like we did the previous, 157 is what it was last year, I think that we could show an increase and be about maybe $50 million lost for the quarter. If we're lost $50 million, guys, we're headed in the right direction, in a great direction. But if they go above 50 million loss, let's just say they only lost 20 million, or they only lost 10 million, or they broke even, or they even have a positive. Good night to you and the shorts and the haters of Wall Street, because this company is headed in the right direction. Now, as you read this whole chart here of what I'm showing you, what they've done in the past, it tells you they had an outflow of $303 million, but those are operating activity outflows. That's not an everyday outflow. They don't even have that this year. They didn't have that last quarter. But the reason why I show you the bottom of the chart is because I want you to see what they're doing in America alone. They hid the SG&A and the one-timers in the U.S. operating loss market. They lied. And I don't want to say they lied. Maybe they didn't lie. How can I put it? They tricked Wall Street. And it was for a good reason, because if you look here, the only segment that's actually losing money is Europe. And where did they actually close their stores? Europe. They closed a massive amount of stores in Europe. They're closing them all. They managed to lose over the last 2 years almost $44 million in Europe alone. But in America, they lost $3.6 million 2 years ago. Last year, they lost 144, but that was just because of the one-time expenses in SG&A. I feel they're positive. I feel they're positive, and I feel they've been lying and been hiding it, I should say, more than what people actually want to recognize. So I love what they're doing. I love the stock. I love how it's going. So let's go ahead and talk apples to apples now that we've seen the chart and we understand. They managed 2 years ago to lose $3 million in this quarter. And nobody talked about it, because all everybody wants to talk about is, did you know when they lost $3 million, they actually paid off all their senior notes? They paid all the interest off. Oh, $33 million worth of interest. Or $24 million worth of interest. They did all of that in 2021. 2022, they laid down the infrastructure for this company. Now it's rinse and repeat. 2023, a clean slate. And you're going to see a profit on GameStop this year. There's no doubt in my mind. If you understand how pluses and minuses work, then you understand this company is profitable. If you don't, it's because you don't understand what I just showed you. Run it back, guys. They have been hiding the one-time charges in the SG&A for the last 2 years. Now, throughout it all, guys, I've been telling you that this is what they've been doing. They've been making it look that they're not as strong as they are. This is where you show weakness, and it's okay. I'm the wounded animal, right? That's it. But guess what? I'm really not. I'm strong as hell, and I'm GameStop. And until I'm not. GameStop, can't stop, won't stop, GameStop. What do I think they're going to do this quarter? Well, one, if they go positive, it's lights out for you guys. If they lose $50 million, I'm okay. It's a drastic increase. But they're going to be around, from my math, $50 to $10 million loss for the quarter. If they did that, they're sailing. If they did better than that, it's murder. Peace.